Hey, good morning, traders. Hope you're all doing well. Hope everyone's doing well. Happy Monday. We're back at it today, July 24th. And we do have a pretty big week coming up. We got a full week of trading. We got last week on Friday, we ended a note on OPEX, which for me is not, I don't really like to spend time trying to trade OPEX. It's just not, I don't think there's too much value in it. I think there's kind of wishy washy. And we got up and down rotation movement on Friday. And this week, we do have a lot of news. We do have a lot of expected movement realistically coming into the market as we get ready for the Federal Reserve. The Fed starts its two-day meeting tomorrow, which on Wednesday we have the expected rate decision press conference, all that good stuff. We're expecting 25 basis point hike to come out in July to wrap up this month. And realistically, there's a high probability that such a hike does happen. So we're going to be all eyes on that. I think that we start a slower week, slower movement until we get that Fed announcement where we could see just kind of sideways activity overall. And I'm going to talk to you guys as to why I expect a little more pullback in the market before we start looking at the potential dips to be bought into the next few weeks. But first and foremost, let's talk about energy, right? Delegates from most of the world's largest economies in Goa, India, over the weekend to discuss the energy transition as extreme heat takes control in many areas across the globe. I was just in Greece, even the north part of Greece, it was like 40 something degrees. It was honestly unbearable. I can't imagine what other even hotter places are like. Even just going to the beach was just something that I didn't even want to do, right? It was obscene heat and heat strokes all around realistically. So in relation to that, right, the G20 energy transitions working group meeting was intended to set the tone and strategy. And while there were some points of agreement, the summit ended without any consensus on phasing out fossil fuels. So investors in energy and renewables are especially taking note ahead of the gathering of the G20 leaders in September and the COP28 forum in December. Greenhouse gases like carbon dioxide, methane, and nitrous oxide continue to reach a new record high while increasing temperatures. A lost biodiversity and extreme weather events are said to be growing in intensity. And it doesn't help that much fossil fuel manufacturing usage is being outsourced to developing nations while deregulating of environmental protections has been used to advance their economies. So this can even be seen among countries that are powering the green revolution like nickel smelting for EV batteries, with further criticism being revealed at the sustainable committee commitments of some of the world's most profitable companies. So many nations are also attempting to shore up domestic fuel stockpiles as Russia's war with Ukraine and geopolitical tensions elsewhere threaten to weaponize energy supplies. So, even last week, the U.S. Senate voted to block China from purchasing oil from a strategic petroleum reserve, while the U.S. Energy Secretary Jennifer Granholm reiterated calls for additional supplies as it gets dangerous when the prices are too high. At the same time, the American government has plowed billions of dollars into subsidizing and tax breaks into businesses involved in electric vehicle technologies and energy transition. But other countries may not be able to finance such initiatives or those priorities and makes finding a consensus quite complicated. This all comes into the potential of oil bottoming out realistically as there are these difficulties and demand I think is starting to increase for the next maybe 15 18 months. I do suspect that we have seen temporary lows here in oil that could make a next upward move, right? I think that's one of the next interesting longs that I have on the table. Now, to deviate a little away from that, we can start talking about Elon Musk and Twitter and X, meet quote unquote X, right? When Elon bought Twitter, he aimed to monetize a platform through three separate strategies, which are subscriptions, advertising, and becoming an everything app. The initial months following his acquisition focused on the first two parts of the action plan, but the latter, which is becoming an everything app, is now kicking into high gear. And in a series of tweets and retweets, Elon Musk said that he would ditch Twitter, the bird, by rebranding to X, with the future of the app focusing on audio, video, messaging, and payment and banking, as well as creating a global marketplace for ideas, goods, and services that are powered by AI. As Meta platforms and others look to take away some of the market share from Musk's own entity. So again, will Zuckerberg follow up on Twitter killer threads with a new pivot on an everything verse or whatever it is, whatever the case may be. We'll see. But so far, Threads has dropped off substantially, and we're seeing Twitter taking some different approaches here over the last few days. So I don't know. We'll see where this kind of goes. But realistically, I did see some threads. Like, I don't have access to threads in Europe, but some of my friends from Canada were here, and I took a look at it and didn't look anything interesting, to be honest with you. Let's talk about valuations here. Stock valuations have had a tough time rising in the rate environment, but Goldman Sachs, there are three good reasons as to why this is not currently the case. The S&P PE, right? If we take a look at VOO, which is the Vanguard ETF, the PE ratio has risen to 20x from 18x since the start of April, while the Treasury yields, the U.S. 10-year yields, and also TLT has risen more than 30 basis points. So our rate strategists expect that progress on a soft landing and our economists view for no Fed cuts until Q2 2024, and it will lift the 10-year yield rate, right, the nominal rate, to 3.9 at the end of the year, dipping to about 3.75 in 2024. This is what strategist Dave Costin wrote. Realistically, I think that there could be a larger dip in the U.S. 10-year, which is why I'm looking at some kind of upside in the bonds. I think over the next few weeks, we see some downside pressure in the U.S. equity market before we see a dip buying opportunity into early August, and then a transition point where in the fall, September, October, we have another large dip buying opportunity before we run into highs probably into the end of the year and the beginning of 2024. So that's my thought process this week. We have the Federal Reserve that comes out. I also am looking for some of the sell side to kind of open up. Let's talk about the futures trading plan today. We have a lot of volume that's being built up here in these mid 70s right now. We have a very large volume profile ledge as well. I think that into the 45.82 area on the S&P 500, 45.82 to 84 is a decent sell region, but I think they could potentially start trying to sell that into these like higher 70s as well. I think there's a massive barrier between 45.55 and 45.60 on the S&P 500 futures that sustains fairly well until we start to see the Federal Reserve. I do want to see that area break this week, but we're going to have to start seeing some harder selling from above. I think it's going to be very, very difficult for buyers to break that area, as a lot of volume has been condensed in that region, where I think that they do try to buy that dip. But ultimately speaking, I think at some point this week, we see 45.25 and 4,500 as this 45.55 area does break to the downside. So that's what I'm going to be looking at. I'm going to be focused a little more on trying to sell some of these rips into this week and seeing how far we can go on that. We've seen fairly low volume in the recent last week, and I think that after this OPEX, we can start seeing a little more volume coming in. So what we're going to do is we're going to open up our live trading room. We're going to see you guys there, and we'll see how we can start the week on in the S&P 500 futures market and the futures market in general before we take note of some of this potential news that comes out midweek. So we'll keep you guys updated. Check us out at TRADEPROacademy.com, where we have a free futures course, and I'll see you all next day tomorrow. I'll see you tomorrow.